Hey, quick question. What if I told you the federal government just made a move that could save you $30,000 on your next home purchase and simultaneously kneecap Wall Street's ability to outbid you on your next home purchase? Would you want to know about it? Because that's exactly what just happened and almost no one's talking about it. I'm RJ Hoggard with the Hoggard Group, powered by KW Legacy, and since 2011, my team and I have closed over nearly 500 transactions, flipped 30 houses, and we bought actually 18 rental properties in this market. I can tell you with absolute certainty what's about to happen in 2026 really hasn't happened in years. The chessboard just got flipped, and if you're buying or selling in the triangle this year, this next 10 minutes could literally change your strategy and how you approach the purchase of your next home, or if you're trying to sell your current home. Now, let me just mention this. If you find this information valuable, hit that like button. It tells YouTube to show this to more people who need it. All right. Now, let's break it down and talk about what just happened, because we need to take a look at two policy bombs that just took place. So here's my forecast for 2026 in the triangle. Before we do that, more transactions, the freeze is thawing, prices will stabilize, maybe tick up slightly. Inventory improves, not a flood, but actual options. And the big one, buyers get their negotiating power back. Now, before you think I'm just throwing darts at a board, let me show you why I'm confident. Because as I mentioned, we've got two massive policy shifts that just dropped. Now, the first shift is MBS purchases. The federal government just stepped back into mortgage-backed securities. I know, sounds completely boring, but here's what it means in English. When the government buys these securities, it pushes mortgage rates down. Not dramatically, but even a quarter point or a half a point drop. That's the difference between a $400,000 home and a $430,000 home for the same monthly payment. Now that brings sideline buyers off the bench, and markets don't need cheap money right now. They really need predictable money right now. Policy shift number two, the institutional investor ban. This is really the nuclear option. President Trump just announced a ban on large institutional investors, think Blackstone or Invitation Homes, buying single-family rental homes. Now, will it fully stick? Well, maybe not. But here's what matters. For the first time in years, there's federal pressure to stop Wall Street from treating your neighborhood like a stock portfolio. Now, what does that do? Well, it removes deep pocket cash investors who were really inflating prices, and it gives regular families a fighting chance, and it puts a cap on how high prices can artificially run. Now, this isn't organic market recovery. This is policy-assisted normalization, but honestly, I'll take it, because what we've been living through since 2020, well, that wasn't normal either. So quick time out. If you're getting value from this information, drop a comment and let me know what market you're watching. I read every single one. All right, let's get back to it. Now let's take a look at why December is your crystal ball. Now before we dive down into each town, let me tell you why December matters. December is when all the tourists, frankly, they leave the party. No FOMO, no just looking around, just people who have to move. So when we see closed sales jumping 30, 40% while inventory is dropping, that's not an accident. That's a signal, and the buyers are out there. They're just disciplined. We just saw this with a house that we put on the market right before Christmas, and it had multiple offers. But they're looking for value, and sellers who price correctly, they're winning. Let me show you exactly what that looks like across Raleigh and what we call the Five West: Cary, Apex, Holly Springs, Fuquay-Varina, and Morrisville. Let's take a look. I'm going to move fast through here, but I need you to pay attention to the pattern, because it's telling us something. It's really telling us where the opportunities are, and I want you to be able to take advantage of the opportunity. So we're going to start in Cary because Cary just gave us a masterclass in how markets self-correct. Now the median sales price in Cary is $558,500. That's down 5% from November. But watch this. Closed sales up 42%. 42%. You see what happened? Sellers blinked first and then they adjusted their price and then the buyers flooded in. That's textbook price elasticity. Now, days on market ticked up a bit to 27. Buyers are still being picky, but here's what matters. Inventory dropped 25%. Only 292 active listings. Translation, Cary adjusted, cleared the backlog, and tightened right back up again. My 2026 in Cary stabilizes here, starts appreciating again once rates ease. And if you're thinking about listing in Cary, Q1 is your window before competition heats back up. So take a look at that for Q1, for the first quarter. So Raleigh, let's take a look at Raleigh. Our biggest market is behaving exactly like a healthy, efficient market should. Median price, $450,000, down 5%. Closed sales, 580 homes, up 31%. But inventory, still down 21% from November. Months of supply, 2.4, which is still historically a seller's market, but this isn't weakness, this isn't collapse, this is just normalization. Buyers and sellers are finding each other again. And cue the music. Deals are getting done, nobody's panicking. So my take on 2026, Raleigh becomes a negotiation market. You can ask for repairs now, you can counter offer, but don't confuse negotiation with desperation. Under 3 months of supply, that's still tight. It's still a tight market. Now, by the way, if you are enjoying this breakdown, make sure you're subscribed because we do this every single month. Updated data, real analysis, zero fluff. Information that's going to give you the power to either buy your next home or sell your next home. All right, next up, let's take a look at Morrisville. Morrisville, you look rough on paper, my friend, but let's explain why it's not. Median sales price, $404,500, down 12%. Closed sales, 14 homes, down 26%. Days on market, 74, more than doubled. Looks scary, right? Here's the context. Morrisville had 6 new listings in December. You read that, or heard that right, I should say, 6. When volume is this low, a single luxury sale or single distressed sale swings the entire median by thousands. This isn't a trend. It's statistical noise in a small sample. Now, check this. Months of supply is 1.6, still under 2 months. That's not oversupply, that's hesitation. My 2026 for Morrisville bounces back fast once buyer confidence returns. If you're looking at townhomes or condos here, this might be your entry point before it tightens back up again. Now, let's head over to Fuquay-Varina. Fuquay is quietly showing us what real strength looks like. Median price, $428,745. Basically flat, down 0.5%, but closed sales up 12%. Days on market down to 44. List price received 98.5%. Inventory down. Supply 2.4 months and dropping. This is a market that didn't panic, didn't overcorrect. It just worked. Buyers and sellers stayed rational and deals kept closing. My 2026 take, Fuquay is my sleeper pick for this year. You've got affordability, you've got great schools, reasonable commute access. When rates drop another quarter or half point, this market pops. If you're a first-time buyer scanning the triangle, put Fuquay on your short list. I've got first-time home buyers who are doing just that. Now, Holly Springs, you're in full flex mode right now. Median sales price, $650,000. Up 7%, closed sales up 26%, days on market 28, months of supply 1.5, one of the tightest in the entire triangle. New listings are down 32%. When prices are rising and inventory is shrinking, you have one thing, structural shortage. Demand is outpacing supply, period. My 2026 take, Holly Springs stays hot all year. If you're selling here, you are in the driver's seat. If you're buying, expect competition. Come pre-approved, be decisive, and move fast on the right property before someone else does. Now, finally, let's take a look at Apex. Apex, which might be the clearest signal in the entire triangle right now. Median price $594,500, up 3%. Closed sales up 17%. Days on market 22, that's down 17%. And list price received 98.2%. Months of supply sitting at 1.7. Everything's accelerating. Everything's tightening. Apex didn't miss a beat. My 2026 take, Apex stays competitive even as the broader market normalizes. Schools are elite, location is prime, and buyers know it. And if you're targeting Apex, you need to be pre-approved, emotionally ready, and financially prepared to compete. All right, quick question for you. Which of these markets surprised you the most? Drop a comment for me. I'm curious what you're seeing out there and would love to see your take. So let's look at the bottom line for 2026 and bring all of this information together. The federal government is stabilizing rates. That brings buyers back. Institutional investors are getting pressured out. That removes artificial price floors, and the December data is showing us that when sellers price realistically, buyers respond. Here's what that means for your specific situation. If you're selling in 2026, price it right from day one. You've got to price it right. The days of list high, and we'll see what happens, those days are over. The market will humble you fast, but if you're realistic, you'll get offers. You'll negotiate from strength. You'll close and you'll move on. Don't bleed on the market for 90 days trying to squeeze an extra $10,000 or $20,000 out of a house. That strategy costs you more in time and stress and carrying costs. Now for my buyers, if you're buying in 2026, you have leverage again, but it's not everywhere. So if we're looking at Holly Springs or Apex, those are still tight markets and you'll compete with other buyers. Morrisville, Fuquay, and parts of Raleigh, more room to negotiate, but know your market, know your numbers, and here's the key. Don't wait for perfection. The best deals don't go to people with perfect timing. They go to people who are ready when opportunity shows up. So get pre-approved, know your max budget, understand what you're willing to compromise on, and work with a realtor who has experience. Because when the right property hits, you need to move in hours, not days. So 2026 isn't about timing the market. It's about positioning yourself inside the market with clarity and confidence. And after nearly 500 transactions, and as I mentioned before, 30 flips and 18 rental properties, I can tell you this, clarity beats timing every single time. First, if this was helpful, hit that like button and subscribe. We do this breakdown every single month with fresh data, fresh information, and you don't want to miss it. It arms you really with information to make the wisest decisions possible. Also, drop a comment below. Tell me what market you're in and what you're watching, what you're seeing, or the questions that you have. I read every comment and I reply to as many as I can. And third, if you're serious about buying or selling in the Triangle in 2026 and you want a data-driven plan, not headlines, not hype, just what the numbers are actually saying. The link is there. My email information is there in the description. The telephone number is right there. Reach out to us. We would love to talk to you, walk you through your situation, your timeline, your budget, and build a plan that actually works for you. Because here's the truth, the market's shifting. The rules are changing, and if you're making one of the biggest financial decisions of your life, you deserve someone who knows how to read the room. Let's make 2026 your year. I'll see you in the next video, and I'll also see you, hopefully, at the closing table. I'm RJ Hoggard with the Hoggard Group, powered by KW Legacy. We'll see you soon.